Hi everyone, I'm previewing the week-aheaded market and I'm putting an extra emphasis on the oil price, which has been soaring this month after getting trounced for most of the year ahead of the OPEC meeting this week. I will also run down this week's economic calendar, which includes the November non-farm payrolls report. GKFX Prime presents the week ahead. So, in my opinion, oil is one of the best markets for trading because of the huge price moves and trending markets you can regularly find. But of course, oil is hugely important to our daily lives. And let me tell you, we consume a lot of it. How much? Well, the world consumes an Olympic swimming pool's worth every 2 minutes. Or 637 swimming pools worth every day. Not sure I'd fancy a swim in one of those though. If you like that mad fact on oil, please click that like button. It really helps us spread the word about these videos. Moving swiftly on to the economic calendar this week, we start with retail trade data from Japan, which is followed by a series of China PMIs for November, all of which are expected to see a modest pullback. It's a busy Tuesday. The RBA sets Australian interest rates, Switzerland released GDP data, there is Eurozone CPI, and the Fed Powell testifies. Wednesday, we have Australian GDP and US ADP unemployment. Thursday, there is US ISM Services PMI. And Friday is the big one with the monthly US jobs report, where just over 500,000 jobs are forecast to have been added back into the US economy. So in case you hadn't noticed, oil is having a very good November. It has gained a third of its value in November alone, and it added 10% in one 5-day stretch. Before the recent gains, oil had been trading sideways since crashing and rebounding in the first half of the year. Now the breakout has finally happened and it went to the upside. The research team described the situation with oil very well in last Wednesday's daily market update, saying constrained supply alongside renewed economic optimism after the election and vaccine news has spurred a big short covering rally for oil prices. On Monday, it's all about how these constrained oil supplies will be affected by the output decision of OPEC plus a cartel of the world's biggest oil producers. The plan had been to raise production by 2 million barrels per day in January after deep cuts this year. However, due to the second wave of COVID-19, it is expected that the group will delay this by 3 months. As we know, higher supply, all else being equal, leads to a lower price. So if the group does press ahead with planned output hikes in January, that is a negative force on the oil price, whereas delaying the hikes should be oil positive. But there is more going on than just the decision on output. Whether the group can even make a decision is more crucial. OPEC and its allies are trying to strike a tricky balance of helping rebalance the oil market after a demand shock and increasing market. This is increasingly a tough line to walk, and already Qatar has quit the group, and there are rumours that the UAE could quit too. No decision or very obvious signs of discontent would undermine the perceived power of the group, and is a big downside risk for oil. Right, thanks everyone, good luck trading this week, and make sure to subscribe to our channel so you don't miss the next video.